What is up, guys? Bear Market Miner here. Another video for you today, courtesy of a read-through on a Coin Telegraph article I saw talking about the effects of the Bitcoin halving on hash rate and how it should affect some of the bigger mining companies. And we'll also talk about a little bit how I think it may affect some of the home miners if they're still even mining with the current electric prices and hash rate skyrocketing and all that good stuff. So let's get into it. It's by Jesse Coughlin. Old mate Jesse, appreciate it. It says 20% of Bitcoin hash rate could go offline after halving, courtesy of Galaxy Digital. I think that's who did the research for it. Yes, it is. It says most older mining rigs will struggle to break even after Bitcoin block rewards halve in April, prompting miners to take them offline, according to research from Galaxy Digital. As much as 20% of Bitcoin's current hash rate could go offline after the Bitcoin halving, which will see block rewards slashed in half and leave only the most efficient mining rigs standing. At the end of 2023, over 70% of the Bitcoin hash rate was churned up by 8 ASIC miner models, Galaxy Mining's analyst said. Given how sensitive the break-evens are for various ASIC models to Bitcoin price and transaction fees as a percentage of rewards, we estimate that between 15 to 20% of the network hash rate coming from the ASIC models. So we'll jump on over here to ASIC miner value. So I've put in a commercial electric rate of 5 cents per kilowatt hour here, which I think is about the mean if you're comparing some of the largest commercial Bitcoin mining companies to the medium and smaller size. I think the range was 3 to 6 cents that I could find, with I'm sure a much smaller majority being in the 3 cent range and a much larger majority being in the 6 cent range, but I could be wrong. Someone let me know down in the comments if you know a bit more about that. So I think there's about 150 total Bitcoin ASIC miners on this page, and what we maybe have, a quarter of them currently still profitable. Oh, actually, sorry, it goes down way further. So at that rate, you're probably looking at about half, just over. But they won't be using some of these models. I think, this M63S is like a $12,000 ASIC miner. They're probably more likely to be using the S19J Pros, things like that. And at a good residential rate of 10 cents, there's still the expensive ones that are currently still profitable. So if you got one of those as a residential miner, actually, I doubt it, 7,000 watts, unless you're upgrading your circuits and stuff like that, I'd be surprised. S19 still down here, but they're 5,000 watts. But I think out of the 150 on the page, maybe 30 of them are still currently profitable at 10 cents, and that's a pretty good rate. So I'd be surprised if, after the halving, definitely home Bitcoin miners are 100% phased out. I'm pretty sure they already are. Maybe a couple of these models people are rocking if they really die hard into it, but still doable, I think, if you're at 5 cents, which, these commercial companies need to stay afloat. So let's keep reading. It says Galaxy's prediction analyzed possible future power prices. It calculated the break-even point for the mining rig models based on post-halving economics, with each mined Bitcoin block set to cut rewards from 6.25 to 3.125. Yep, that's half, with transaction fees making up 15% of the rewards for Bitcoin price. That's based at 45,000. What are we now, about 51, I think? We've had a bit of price regression in the past couple of days. But losing 50% of the reward. Rewards, I think they're calculating basically how much you're losing. When they say transaction, I don't think they're talking about transferring it from account to account. They're probably including that and the, if you mine, if you hit a block and hit 6.25 Bitcoin, I think the fee on that is about 0.6 something percent, so about 10% of that, and then maybe a 5% transfer fee. I think that's how they're working it. But these numbers are hard to tell. 15% is pretty hard. Different exchanges will have different rates. So, I'm sure they're pretty close. Following on, they say, on the more conservative end of Galaxy's estimates, nearly all of the older mining rigs, namely the Bitmain S9, the Canon's A1066, and the Micro BTS M32 models would shut down, while around half of the Micro BT M20S and the Bitmain S17s will manage to stay online. So let's have a look. So if we go in here, M32, was it the Micro BT M32 models. So what, they said these would be shutting down. Okay. So what are they at? What price are that? So that's $1.80 a day profit currently. And then they said the S17 models would be stay online. So 232, I'm not sure if that's the exact one they're using. 255. So the margins are pretty tight already, maybe 50, 60 cents between them. And that's the difference between staying online and staying offline, I guess, for some of these bigger companies. Let's move on. The 5 models together were responsible for around 15% of Bitcoin's hash rate at the end of 2023. So what have they got here? Low end range, the models high end range. Amount of hash rate to come offline, 83 equihash, up to 115. So that's a pretty substantial number. What's the Bitcoin hash rate right now? Is it 600-ish, I thought, from memory? I could be completely wrong. Someone let me know. I need help with things like this, you know. Where are we? Largely surviving with the Antminer S19 and S19J Pro, which are newer and more popular models that made up over half of Bitcoin's hash rate in 2023. Wow, that's a lot of S19s. As well as Canon's A1246, though a small percentage of each still could go offline in areas where operational costs are higher. So that's the electricity rate we're talking about again. However, a more dire scenario would see almost all older models going close to completely offline. The Galaxy again predicts that the Canon A1246 and the S19 models are able to hang on. So did we look at the S19s? Were they Bitmain? Yeah. S19J Pro, $6. Yeah, see, I mean, cut that down to 3. I mean, what do they lose? What are the running costs like? Do they lose another 50% of it again? Maybe $1.50 after they pay all their bills? Who knows? But pretty hard to say. It's looking pretty interesting. I would not be surprised if there's quite a few different companies, commercial Bitcoin mining companies that just can't keep up after the halving, or maybe they're a lot smarter than I am. In fact, they're definitely a lot smarter than I am. So let's hope that they've got some sort of strategy to either reduce their costs, get more Bitcoin. I don't know how they're going to do that. But I mean, look, basic economics, supply and demand, you would think less supply of Bitcoin. I mean, there's less and less every year, but with the halving, you know, that's going to really kick that into gear by half, if I'm not mistaken. So basic economics, supply and demand, price should go up. Supply is down, price should go up, but you never know. It's a pretty crazy world we live in. So let me know what you guys think. Are you Bitcoin mining at home? Is anyone still hanging on with one of those, what were they, S19s or S17s or whatever you got? Let me know down in the comments, and let me know if you think that a lot of these bigger companies will survive this, or if it's just, is it the end for Bitcoin mining? If you liked it, guys, make sure you like and subscribe. Peace.